back. Another session to talk market signals and trading opportunities. If I run through a couple of headlines before we get going, what we know is the FX markets have failed to impress this week. Markets seem calm ahead of Jackson Hole. Commodities and commodity currencies seem to have some sense of confusion. And there's been a large upswing in Brent, in the WTI crude. Mate, walk us through it. What do you see from your lens? What trades are making the moves? Who's making the moves? And what signals should we be looking for?
Well, good morning, Will. I think a couple of things. First off, we've seen a little bit of a sell-off as far as US dollar, and that in turn has pushed up a number of those currencies. We've got the Aussie just sitting shy of 73 cents, Will. You've got the Kiwi knocking on the door of 70 cents. You've got Euro back at around that 117.70 number. So that's really bounced from that downside that only, this time last week had really been seeing at 5-year lows. So that gives us an indication that US dollar, we're sitting here waiting for Jay Powell. Over the next 24 hours, we'll get a better indication, and that'll end Saturday, that symposium in Jackson Hole. So that really is the storyline, and don't take your eyes off crude oil. It's bounced $6 since Monday afternoon our time. So here we are, 2.5 days later, and it's had a massive move to the upside, and those sort of gains need to be, I think, appreciated from a trader's point of view.
But if we look at very briefly Jackson Hole, let's not talk too much about it because there'll be plenty of news coming out of it, if there is any news coming out of it. What we suspect they're going to talk about is transitionary inflation, taper timelines, and COVID impact.
Yeah, exactly right. Well, let's discuss. We'll go from the old. Whenever an anchor used to ask me a question like that, I'd always answer the third one first, and then move to the second and the first. The COVID impact.
Short-term memory, Pete. We like that.
Well, more to a point, Will, but you've got to own the conversation. COVID impact, who knows? And that's something that no man or economist has any indication unless you're getting all of the raw data. The taper timeline, several confusing messages coming out of from ahead of the summit. So that is the issue there. It's confusing. No one's got a clear indication what the general mood is, and neither should they, but there's no leaks or there's nothing to really, hit a chisel into a bedrock to say this is it. And the tapering announcement anticipated to come with the FOMC meeting 21-22 September. So that's, 4 weeks away. So there's the taper timeline trends. And I'm expecting it to be an underwhelming discussion. So prove me wrong.
But let's put a pin in that there then, right? There's the call. Underwhelming discussion for Jackson Hole. There's a bunch of things they'll talk about, but the real deal will come later in 4 weeks' time. Look, let's dive into the next layer of this, Pete, which is really buoyant markets. S&P 500 index. The chart on screen talks about, if you like, an index that hasn't had a pullback for more than 10 months.
Markets can be irrational for a longer period of time than you can be liquid. And maybe we're going through that phase at the moment, Will, that they are irrational. And when they do wash out, expect the unexpected. That's all I'm saying. Nothing goes up in a straight line forever. It's been one-way traffic, and eventually there will be a day of reckoning.
All right, let's take a look at the cable here against the US dollar. It's a progressively impressive chart. Taking a small dip. Seems to be consolidating there around that 1.357 number.
Well, that chart's around about a 14-month window from the 1st of June 2020 to where we are today. And you've got those. I just want to make reference to those three lines for the trader. There's a 20-day SMA, there's a 40, and there's a 200. And you can see how they're all different over the life phase of that chart. Certainly, there's plenty of different characteristics all the way through. But look at it now. They've all converged to that nearly to the same point. So that's really telling us from a technical standpoint, keep an eye on that. And you've seen a very solid sell-off over the last couple of months with US dollar against the pound. Maybe it's time for a rebound. So, the traders need to look at all of those points, your moving averages, naturally, your RSIs, relative strength index. We run huge amounts of trading academic education programs each day, Will, many languages across the world, all complimentary, free. So you don't need to fund an account. You can just learn through logging on and seeing what we do. It's quite incredible, to really get an indication as far as what the technical indicators are. And that's what every trader needs to be mindful of. Technicals, as well as the fundamentals, of course, and the seasonality points.
Technical indicators, fundamentals, trading signals. Peter McGuire, very important. Final chart to today's session. We'll be talking about the 4-hour chart here on copper futures.
Yeah. When we look back on that, Will, and just put that, you can see that huge sell-off to 3962, the 4.5-month low that we've just come out of, and that big V-shaped recovery. Well, that was on around the 18th, 19th of August, after that huge sell-off in Singapore with iron ore, and that really brought that whole market down to that point. And then they rebound so strongly on Friday, and it's been onward and upward since then. So that just again demonstrates the volatility, what happens as far as that you've got a 200-day moving average, you've got a 50-day moving average, and where they are and what they're representing, and a 20-day, what they're representing to the clients and to the opportunities that present themselves. So many traders say as soon as it goes underneath those moving averages, it's the time to sell. When it goes through them, it's a time to buy. You can look at all different points, and everyone's got their own interpretation. Really will.
In 60 seconds, run me through the signals that we expect to come out of this week, early into next week, if any.
I want to keep an eye on that US dollar index if it continues to be sold off, and we've seen that over the last 24 hours. So there's the first point as far as an underwhelming from Jay Powell and the Jackson Hole team. The symposium. The second point is what happens as far as equities. Will keep an eye on that, that onward and upward. I keep a very close eye on crude oil. The reason is because it's a global commodity that's used, 100 million barrels a day, and the consumption. And the next part, of course, is that it's really a barometer that demonstrates the fragility or the growth of any economy. And that's pretty much where I'm sitting. So US dollar, and then all the currencies naturally coming off that, those cross rates and everything against the US dollar. I think just keep a very close eye. And I've got to throw that in, Will, keep an eye on gold also.
All right, Pete. Well, that's the last fast minute that you'll hear today from Peter McGuire on Boardroom.media. We'll catch up with you again shortly after Jackson Hole and early in the early days of next week as we look at trading opportunities and signals. That's the wrap.
Thank you, Will.